Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. We're trading the final day in March, and we're seeing some interesting price action. We're seeing huge price action, actually, across the board. I think that we're in an interesting situation that we didn't really expect. Nobody really expected to see this type of bullish price action in U.S. stocks. There's optimism now that the Iran war may end. I have to tell you, I got joined just a little bit late today because I've been listening to so much news. And one of the things that you learn after a while is when you start seeing things that you don't understand, it means that something's in play. Something's going on here. We've got the big rally in U.S. equities. We've got all of a sudden oil showing a little bit of weakness after being just absolutely crazy yesterday after the electronic open. This feels to me like somebody knows something somewhere. But I'm not overly optimistic. We're going to take a look at our poly market odds as well. That's become sort of a staple of what we're doing these days, just because it's sort of a crazy time, and we're trying really everything to figure out what's going to be happening here in the coming days, weeks, and months. And there is so much uncertainty that I don't really know what exactly to make of any of it. And one of the things you can do as a trader is you can always just say, hey, I don't know. And we don't need to know exactly what's going to happen. We just have to have a way to address the volatility, to manage our risk, and make our trades. So we've got some trade updates today as well. We've got a little bit of action. I would say on that 9 EMA, we had a pretty good little scalp that just came across the board on the 1-minute ES chart. I'm going to show you that one. And then also we're going to break down a key level for the dollar yen. I put a trade ID out last week. I don't know what happened with the entry, but the entry is no longer really valid. We're going to look at a new entry for the dollar yen as well. We've got euro Australian dollar. It looks like that trade is going to set up nicely and develop. We've also got the dollar CAD, which I think is going to be a pretty good trade for us as well. So a lot going on today. I want to welcome everybody back. Marvel, good to see you. Marvel, welcome. Just waiting for the countdown. Yeah, the countdown's over. Let's just go ahead and get it on. Jason Max and Yo Shane. Yo Jay, how are you doing? Pretty good stuff. Greetings to everyone. Greetings to you, Marvel. Over in the How to Trade community, we've got Tuku, Bobby, Bob, and Ralph H. Good to see everybody back in the trading room. As always, you got to trade well. Do your best you can, given this volatility. We knew Tuesday was going to be a pretty big session. Typically, that's what we see early in the week. After that Monday doldrums is over, Tuesday comes online, and we have really a lot of business to tend to. So, all right, let's go ahead and dive into it. Where to even begin? I mean, with so many markets in play, where to even begin? Let's go ahead and start with our trade updates for today. We've got the euro Australian dollar. I've been showing this one pretty much every day. I think that it's going to be a pretty darn good trade for us as we roll forward in time. And we're looking at 169 even as being a potential area where we're going to short just in front of this zone, and we're right there at about 167.49. So we're looking at about 168 and 3/4. Anywhere right up in here is going to be robust topside resistance. I think that could be a pretty good way to approach this market. I think that it's probably going to be a nice trade, a good way for us to get away from the U.S. dollar, at least for maybe a session, maybe a session or two or three trades in a row. Absolutely huge. Absolutely huge. Let me see. T, good to see you. T, salute my brother. Please check. How's the Nas and what do you think at it this week? Yeah, I'll take a look at the NASDAQ as well. If there's any more markets you guys want to look at, feel free to just shout them out in the live chat, and I'll be sure to give you my opinion on them. Like this Euro Aussie, though, this gives us a chance to diversify away from the U.S. dollar. Now, getting back into the U.S. dollar, this dollar loonie is going to be extremely active. And the big move today is absolutely fascinating because you've got sort of crude oil still firmly above 100, but we're going right down to that 100 level now. It's clear that somebody believes there's going to be a resolution. Okay, WTI just fell beneath 100 for the first time in a few days. Now we're at 99.84, 99.86. So typically, as that crude oil does lag, you're going to see the Canadian dollar lose ground against the U.S. dollar. So we've got a monthly 78% retracement, which is right up there, right around 140 even. I love it because you've got a key number, you've got a big round number at 140 flat. You've also got the convergence of that technical indicator, 78% on a monthly chart, right there at 140 as well. So that's an opportunity potentially to step up and grab a little short. I think that it could be a pretty good trade if it does spin off the deck and come our way a little bit later today. I would absolutely love that. 139.31 is what we're printing right now. We had a pretty good high just a little while ago today at 139.66. So we're very close to testing that 140 level. I like it when the big round numbers, the natural areas of support and resistance, line up with our technicals. When they do that, we have an incredible opportunity to succeed and an incredible opportunity to win. I'm watching that one closely in this U.S. dollar, Canadian dollar. I think it could be a pretty good trade. All right. Dollar yen. Now this one's coming off hard. I've got a weekly chart right here. We've got sort of this spike low that's set up back in the early February, and now you're rocking and rolling north right up to this sort of double top right up around 160.50, and now you're pulling back. This zone right down around 157.30 is really a high impact support zone. It's going to be one of those that I'm going to be watching for probably the foreseeable future. You can definitely see 157.30-ish. I've got the 13-week EMA. Love the 13-week EMA, 157.13, so maybe 157 and a quarter, all the way down to 157 flat. Could be pretty good stuff. Now, we were looking at 157.09s, and I believe that was out last week. Those locations are no longer valid, so we may write up another trade idea for the dollar yen. Something like this, though. Absolutely fantastic stuff right there at 157.30. I expect the fight to be right in this zone. We'll see if we keep coming off. Right now we're printing 158.87 with NFP on Friday. We've also got some key levels. We got retail sales coming out tomorrow. A lot of participation expected over the next 72 hours. I think we may test that level. Right now, the U.S. dollar is giving back a little bit of its early week gains. We're printing about 99.97 firmly on our DXY index, and that's going to mark some pretty big volatility today. Okay, so dollar yen, we're all set there with about 57. I would say anywhere from 157.50 to 157 even. That's where I'm expecting the fight to develop here. Still sort of bullish, but I do like the yen. I think the yen at some point this year will make a move. It's just this war has messed up everything. It's absolutely messed up everything. All right, we've got to get out to WTI crude oil futures and just talk about the volatility that we're seeing. Let's go right down to a 1-minute chart. Since I've been talking, just huge ranges. These are staggering for a 1 minute. I mean, absolutely staggering. 101.87 to 101.18. We're talking about, what are we talking about there? 59 ticks, 69 ticks in 1 minute. That is staggering volatility. So we take a look at our ADR. I use average daily range. A lot of people use the ADI, average directional index. I use the daily range, and all this is a 13-period average of what we expect out of our ranges. And you can see not too long ago we were expecting 97 cents on a 1 minute range, and that is ungodly. I mean, there's volatility and then there's volatility. I mean, it's absolute craziness in a lot of ways. So I'm watching this crude oil market carefully. You can see that we came back down and then our ADR's reading about, we're right in the 56 range. So that's about half of what we were looking at just about 30 minutes ago. And the reason why was this big move skewed all of our numbers. We went from about 104.76 down to about 100 even, and then we bounced right back up to 102.78. I can't stress to you enough how big that participation is. I mean, if you're not a veteran trader, I know it just looks like a chart. It's not a chart. It's far from a chart. That kind of action is frenetic. That means that people are genuinely pricing in the possibility that this geopolitical situation is going to be wrapped up relatively soon, and then the bidders said not so fast. So right now, what do you even look at for a key level in WTI crude? You've got to be looking at 100. 100's big. You can see we hit it right there perfectly. The hammer developed. We rallied immediately, and then we came back down and tested the waters down there again, 99.62, and then we shoot right back up to 101.40. I mean, it's just insane right now. It's absolutely crazy volatility. Let's go ahead and pull up let's see if we can pull up our demo trader. This trading DOM for TradingView, I don't really like it. just because it's not really big enough for me. A lot of times when I'm trading on this DOM, in my own trading, I'll turn my screen. I've got about 30, what is this, a 32 or 34 inch screen. But this thing, I'll turn it on its side, or excuse me, I'll turn it sort of rectangular so my DOM can actually give me enough price points to where I can actually look, because you can see this. This is just, this is constantly, I mean, the volatility is so huge. Just keeping the price centered is a real issue. You can see you're just jumping around everywhere. You almost can't even do it on a DOM. So I'm watching that closely. I think that this is absolutely amazing volatility. I haven't seen anything like this. I think this last month in WTI crude oil takes the cake for me, and I've been doing this since 2011. I don't remember ever seeing anything like this. Sure, COVID, when it went to negative $40, okay, that was insane and crazy. But this type of 1 minute volatility sustained is unheard of. I mean, these ranges are staggering. This is unheard of volatility. So anytime we see our crude oil markets pick up, typically that means that something's in the cards. This was sort of the area that we put out on our weekly update, or excuse me, our switch on hot picks for the week. You can see right there, 38%, 97.50-ish. We could test that in the next few minutes. I mean, that's how big this volatility is. I do love that area to potentially dig in and take a long. Look at right now, we're back up to 100 even, or excuse me, 101 even from 100. I mean, this is a hell of a fight. This really is. I haven't seen this. This is new to me. So this type of volatility, a couple of ways you could trade it. The first thing you need to do is either cut your leverage down. Well, I mean, there's only really three things you can do. You can cut your leverage down, you can use tight stop losses, or you can pray. And I'm going to tell you right now that you're going to run into real trouble trying to pray your way out of a big loser here. Nail your entries, nail your exits, low leverage, manage your risk. Don't get caught in this market because there are no rules. Right now we're trading 101.37. It's moved $1.37 since I've been talking just over the last few minutes. It's astounding. This market could explode to 125 right now, or it could sell off to 80. It is wild. It's crazy. You're getting compression right around 100. Very, very bullish. It's a very bullish scenario. If we get a close beneath 100, then maybe we'll see something about it. Let me see. Naomi, good to see you. Naomi, welcome. The markets tell a story. Yeah, absolutely. I mean, it's crazy. It's crazy volatility right now. Marvel, what story has you gotten? I mean, we're going to take a look at some of the fundamentals here in a minute. But as far as I'm concerned, there's only one story, and that's any development out of the Middle East. We saw some big bombs go off earlier. Trump put it out on his Truth Social. Staggering explosions. Questionable times. I don't know how this one turns out. I really don't. That's for sure. Packham, good to see you. Packham, welcome. Eli, I placed the fib from the high to low on the weekly. Yeah, I think that's not a bad way to look at it here. As far as crude oil, I love the weekly numbers. My weekly Fibonacci's are very accurate. Andrea Garwell, good to see you. Andrea, welcome. All right, we had a request for the NASDAQ. Let's go ahead and take a look at the NAS, and then I'll go ahead and we'll get into some of our news and what we're talking about today. So anytime you see volatility this big, and I mean any time that you see volatility that is on this level, you have to take a step back on your time frames. You can see that when we go down to a 1 minute chart and we're still looking at 100 tick minutes, it's tough to limit risk. And I can tell you for a fact the 1 minute chart is not even close to being as dependable as a monthly or a weekly or a daily. Not even close. So when we look at our charts, I'm looking for the macro game. I want to see the macro level. Now, this is the last trading day of March. There isn't another one. March 31st, tomorrow's April Fool's Day. What can we expect out of price action? What can we expect out of participants? Who do you think's trading today? Institutions are trading today, and they're balancing their books. They're balancing their books over the last month. They're trying to figure out where exactly this thing's headed for April, and there's a lot of money coming off the boards, and there's a lot of new money coming in. So what we always have to remember is when we get on a calendar, it's not just the economic calendar that matters, it's the calendar. And last day of the month, expect action. First day of the month, expect action. Now, if we don't get it, then don't worry about it. But today is an extremely active day. The news cycle's got us going. I'm going to have to check the live scan because I want to know what's happening just in the last 15 minutes. That's how fast things are changing. But right in this minute, US 100 is the jury in. Do we see maybe some fractures in the armor of U.S. tech, big tech? I think we see them. We see the limitations already. The energy threats that are coming out of the Middle East have the ability and the potential to stop the AI boom in its tracks. There's no question about it. There's no question about it. In order to facilitate the type of energy that you need to continue to build AI at the rate that it's being built, who's going to fuel these data centers? How's this going to work? Well, we're going to find out. Can you build nuclear reactors that fast, and is that a good idea? These are all questions. How do you get a nuclear reactor zoned to feed a data center? It's all questionable, guys. It's all up in the air right now. We were basically depending on natural gas to be able to fuel the AI boom, at least until some of the other infrastructure was built. If you start talking about needing all the natural gas for human consumption, which is probably the way that it should be, then what? It means that if you don't have the energy, you don't have AI. If you don't have AI, you don't have the NASDAQ, not right now at least. So we're watching really closely here. I mean, I think this is a fantastic illustration of what that energy quotient can really bring to big tech. You don't think of AI really as needing anything. It needs everything. It needs a tremendous amount of resources. You need the conductors. You need helium to make the chips, right? To get the chips for the infrastructure. You need the energy to run the whole damn thing. And if you don't have any of that stuff, you're liable to see a big contraction. And what does that contraction look like? It looks like the big investors, the powers that be, the Warren Buffetts, the Jamie Dimons, all of these superstar traders and investors, they all sit there and they go, well, I guess we'll pull out of big tech for a while. I mean, I'm sure Buffett has no problem buying a bunch of Coca-Cola or whatever the hell he drinks. Really, I mean, that's one of those deals. So what did we see this month? We saw the energy disruption derail the NASDAQ. We're off about 5%. It's one of the bigger losing months you're going to see. Even during the tariff panic of last April, you still closed positive. That was a big negative month. March was about negative 7.8. But since then, it's been really solid. So this area right in here, 38%, I'm still holding sort of a bullish bias here because we do see from price action today that even optimism that the war is going to be over is going to kick everything right in the tail. And stocks clearly are going to be a beneficiary. I imagine crypto is going to benefit. But right now, there's still a lot of questions. And until those questions get answered, you're in limbo. So I'm looking to buy when price gets in a state of disequilibrium. So if I'm looking at the NAS right now, 22.5. To me, that's a no-brainer. Don't even think about it. 22.5, great bid. No question about it. And the real problem with this type of trading strategy is, do we get it? I mean, do we sit around waiting and, we grow big beards and all the hair falls out and we get old waiting for our level? And it sort of feels like that a lot of the time. So if I'm doing that for a very serious trade on the US 100, that's the level I'm looking at, 22.5s, somewhere in that area. Now, we did get back up above that 13-month EMA, which is down there at about 23.5s. So that's about 1,000 points. You can see what's happening. 1,000 points above our big support zone. So there's support. We've already sort of taken a deep sell-off here. We're closing on the positive note. But what happens tomorrow? I don't think anybody knows. So if somebody comes in and says, Shane, I think this is the beginning of the recovery of stocks, I go, you better know something. You better have an inside track on what's going on in the Middle East, because right now there's a lot of angst and a lot of trepidation in the markets, no question about it. However, this was a positive development right here in the U.S. VIX, the volatility index. Remember, this tracks the S&P 500. Long-term average is at 21. We're back to 26. So that's fantastic. Really a solid last day of the month if you're selling the VIX. So 30, right there at 30. 30 is our elevated level, and we're back down to right around 26. So that screams bullish price action. A lot of optimism, believe that maybe this war doesn't go another month. I think everybody would like to see that. The question is, how do we know and what can we do in the meantime to sort of mitigate our risks with regards to taking positions and getting burned? People, for some reason, are very eager to take positions in U.S. stocks right now. They're taking positions. They're trying to call tops. They're trying to call bottoms. They're trying to do all of it. I don't really know that you're going to get much of anywhere doing that. If you're a day trader, yeah, you could probably hit some Fibonacci's or maybe some crossovers and do some good work there. But as far as from a macro perspective, to be a fundamental trader that's trying to invest in equities, way too many questions. Way too many questions. So the VIX, that's just one of the big questions that we're all thinking. Do we get established in a high-risk atmosphere? Are the markets getting used to what's happening? It's all food for thought. Right there, Switch Markets. Remember, if you want to trade anything that we look at today or any of the ideas that we look at today, you definitely can just tune in to Switch. They'll get you up and running relatively quickly. Remember, they have a reverse KYC program, so you can even get up and running in just a few minutes. Multiple ways to deposit, the cash processors, the fund processors that they have over there. There's a lot of things that are on. Go to Trustpilot, check it out. This platform's built for speed and customer service. You just give that a click right there. You can get somebody helping you relatively soon. So Switch Markets, if you want to trade anything that we talk about today or any ideas. Okay, let's get on over to CNBC. You can see these headlines are already, we're dinosaurs. Optimism grows for an end to the Iran war. Well, we'll talk about that in just a second, but you can see that we're green across the board. Optimism grows. What's giving us the optimism? Trump lashes out at the UK and France, tells allies USA won't be there to help you anymore. Oracle's cutting thousands in the latest. It's just all negative. So what we would do is look at these headlines and, number one, take them with a grain of salt because they are from CNBC, and NBC is not really a pro-administration news source. They're not. But when we talk about the U.S.-Iran war, really, when you start seeing headlines like this, I don't know where the optimism comes from. I really don't. I just don't see it. Trump says U.S. will destroy Iran's oil wells, Karg Island, without deal to immediately reopen the Strait of Hormuz. So what does all this mean? Let's take a look at Poly Market here and sort of get up to date on this. We'll get back to price action. There's a lot going on. Essentially, this is the market that we've been watching. U.S. forces to enter Iran buy. Look how far down those odds were. Those were up around 70% yesterday, I believe. So now they're up 15% maybe from like the daily start or whatever it is. But take a good look. Last day of March, now people are reevaluating what happens in April. Do boots on the ground, get involved. I don't see any way around it at this point. I really don't. But if this is avoided, if troops don't deploy and you don't get boots on the ground in a prolonged conflict and maybe a deal's cut and maybe something good breaks, you've seen just how fast the markets can go up and recover. If that is the case, you'll see major volatility in crude oil. It will sell off. My guess is down into the low 80s right away. It'll stabilize there for a while and probably trickle lower. That would be my guess. Now, if you get a peace deal, stocks clearly are going to explode. What happens to crypto? You think crypto moves higher? Man, crypto's been flat for a long time. I don't know that this impacts crypto much at all. I really don't. I haven't seen that evidence. We've been just in a flat spin with Bitcoin. So when we look at our markets here and we say, okay, what does it all mean? Can we get an idea about what's happening? Karg Island doesn't look like. The odds are against the U.S. taking control of Karg Island. If they can, U.S.-Israel-Iran conflict. By December, there's an 80% chance. By June 30th, 67% chance. Trump announces the end of military operations against Iran by June 30th. That's what they're looking at. So at this juncture, you're talking about a situation where we don't really know what's going to happen. Clearly, I've said that 50 times. But there is optimism there that this thing's probably going to go maybe another month, max. Why do you think that is? Why do you think that optimism's in the market? It's not because of any talking points coming out of the administration. That right there suggests that they're going to destroy Iran's oil wells and Karg Island. Well, that's counterproductive. I don't think anybody in the world believes that the U.S. is going to do that. If they do that, then we're going into a long-term energy war where crude oil is going to be at $125 a barrel. It's going to be worse for international clients. Asia is going to get hit really hard by that because they take a tremendous amount of oil out of the Persian Gulf. A lot of people believe the United States is in a better position to weather that storm because of domestic shale reserves, and then not reserves, but shale wells, and then also the Venezuela quotient. They got a lot of oil too, right? I would be shocked if they flatten Iran's oil wells or Karg Island. That would be a major escalation and something that would really screw up the global economy, not just for 6 months, but years and years. I don't think that's going to be the case. I would bet against that. But this is what we're dealing with right now. Statements that are seemingly coming off the wall. And they're very incendiary. We're trying to escalate with words as opposed to operations, and then maybe that's a good thing. I don't know. We'll see. Strait of Hormuz traffic returns to normal by the end of April. Interesting, because this really is what's driving the entire global economy right this minute, is the Strait of Hormuz. 20% of the world's oil goes through there. Oil is right around $100 because that strait, that little patch of water is closed for business. So if that's the case, do you get a recovery, or do you get really the rallies that we're looking for without the strait being open? Probably not. We're saying 24% chance by the end of April. That's only 1 in 4. That's not very good. So if we're talking about the Strait of Hormuz being offline for another 30 days or another month, that's going to pose some major financial challenges going into the summer months here in the United States and globally. That's all we can say about it. So I know that I'm not being a doomsdayer. I really am not, but that's what's happening here. I got to tell you guys the truth. And this type of stuff right here, the Dow Jones Industrial being up 970 points, somebody must know something. I don't think you can believe the Truth Social tweets anymore. I don't know that you can believe any anonymous sources anymore about what's going on, because none of it's really panned out. Fall back on your technicals in this situation. Very, very important that you keep your feet on the ground. Head out of the clouds, feet on the ground. That's for sure. Let me see. Babgees, why would gold prices fall as inflation rises? I thought the opposite would be more logical. Well, think about it this way, Babgees, and we'll look at gold. I know that everybody wants to take a look at what's happening in the gold market. I'm going to keep it as simple as I can with gold, because I just really don't know. Don't have a feel for this market. We'll go to the short time frame zone, maybe place a couple of scalp trades. But as far as market direction, still bullish. Not as bullish as we were. When we were trading up in here, I mean, it was really looking like 7,000, or 5,500. Probably going to be the point of control for a while, and it is not. It absolutely is not. So when I'm looking at this chart, I go, you're still bullish, but we saw the washout right here. That is possible. So to answer your question, Bab, why would gold prices fall as inflation rises? Well, think about what has to happen. If inflation goes up, I understand gold's an inflationary hedge, but if inflation's going up, the concept that the Fed may have to raise interest rates to bring inflation back down is going to put downward pressure on gold. Now, is it temporary? Yeah, it's temporary. You can see that this month right here, that I believe we could almost say exclusively that was the reason for the downturn, is you had what? You had money rushing into bonds. You had that U.S. 10-year Treasury. Remember that one? That one spiked. The yield spiked way up near 5%. That was huge. Folks started getting out of gold and going into bonds. Okay, preferable safe haven, at least for the short term. I understand that. As far as what would you be looking at, though, if you were going to have higher interest rates? What does that mean? It means a stronger dollar. What does a stronger dollar mean for gold? It means fewer dollars can buy the gold. That's what it means. So when we get, like I said, I'm not going to argue with the long side of this market. Technically, we are still in a bullish trend. No question about it. You're above 62%, which means technically you're still in the game. Above 38% means you're still in the game. Right now, are we in a strong trend, though? No, not from a long-term perspective, not even close. We are in rotation. Do we revisit 5,000? I would bet early April we revisit 5,000. That's what I would bet. All right, let's take this down to like an intraday time frame. Let's have a look and see what we can get going. Okay, so a 30-minute chart. You have a very uniform type of a setup here. Sort of the beginning of the Wall Street trading day right there, opening bell, ding, ding, pulled back, and now you're rocking and rolling at the top side. So what you could do is work right from that spike low, the pre-open, right to that high, and you can see we came right off there to 50%, which is right around 5,600, and then we've jammed north from there. For a late day trade, what do you think would be a good trade? Well, it'd be tough. I mean, you're up 3%, so that's solid. Do you want to do something like this? Maybe look at a 38% buy on a 30-minute chart. It's not a bad way to do business. The biggest thing you have to remember, though, is if that 38% does not work, you have to get out immediately. So that's what I would say is more of a high-risk trade going into the late day. Typically, you see gold volumes dry up. Still good action in there. Still good volumes, but typically around this time of day, going into about 2 p.m. Eastern, somewhere in there, you're going to see the gold market start to dry up a little bit. Participation is going to wane. And when that participation wanes, the market gets extremely choppy. So if we're looking at making a trade here, let's go ahead and just get our paper trader up and rolling. What can we really do? Well, we got lots of things we could do. We could look to buy this market right above that 38%. Pretty good trade. I don't mind the price action, really. I mean, the market's still alive. We're going to have a chance maybe to make a few bucks. I'd go 46, probably 35 and a half, somewhere in there. Let's go with a buy limit order, 46, 35 and a half. 35.50, 100 units. I don't know. You got to dial in your own leverage. We'd be looking probably at about $1 a tick. That's still going to be a fairly expensive trade as much as this thing moves. But we can go ahead and put that buy order down. And let's see, where are we at? Should have it right in this zone here, unless I put the wrong price in. 46, yeah, we got a wrong decimal point in here. So what we could do here is go buy. You're going to want to go buy limit. You dial it in here just visually. But something like this, yeah, that's fine with me. Go ahead and buy it, and that would be your order. So if you get an opportunity to buy at 38%, you've got pretty good market symmetry, really. You've got nice big move, opening bell, ding, ding, gold rallies, rotate up, we pull back, we get a little bit of a bullish pennant there, and then a breakout. And going into the late day, we're extremely bullish. We have an opportunity to follow the trend from a 38% retracement level on a 30-minute time frame during the U.S. session. It's not a bad trade. Now, should you be betting the ranch on it? No. It's an intraday price action. It's an intraday time frame, so it's not like we're going with a huge number of converging indicators that are going to show us the way. This would be an intraday pop, what I call a pop trade. I mean, you got to hit that. You got to hit it. You got to get in and out, get your scalp right up front, and if the market doesn't cooperate, you just pull the Band-Aid off and get out. And essentially, that's what you're looking for here out of a trade like this. And you can see that did we get the pullback? Nah, we're not going to get the pullback probably during this stream. But it's worth watching anyways. That would be a trade as long as this top side is still the upper bounce of today's U.S. session. Then, yeah, you probably could be looking to get a short-term scalp in there from 38%. That's what I'd be looking to do with gold here late in the day. Is it a great trade? No, but it's a decent one. Probably not going to get it. That's what I would say. Let me see. So I hope that answers your question, Bab G's on gold. Let's see, Diaspora, yeah, global economic suicide. We don't need positive thinking, beat around the bush speech. So thank you for keeping it real, Shane, because the market certainly will. Yeah, I mean, I'm not gonna be a cheerleader. You know, I'm not gonna sit here and cheerlead because we have to be very sober with what we're doing. We have to understand that. Well, without going into a long commentary on the war itself. The plan, I don't believe, involved going 5 weeks. I think the plan was to hit a couple decapitation strikes, get somebody, kill enough of the leadership to where you get somebody at the table that wants to cut a deal, and then cut a deal. That's not happening. That's not happening. And you're starting to see that Iran has far more missiles and munitions, I believe, than they first thought. I know the intelligence over there is very sharp out of Israel and the United States. Typically, they have about the best intel in the world, and I'm sure they have a general idea of what's going on. But I think there's a few more drones and a few more missiles than they think that were there. I think there's a discrepancy between the amount of munitions Iran has and those interceptor missiles that in essence are keeping all of Israel safe and then all of the UAE states safe as well. Places like Dubai, places like in Qatar. These are serious installations that are defended by incredible amounts of those interceptor missiles. So the longer that this goes, we start to get into the unknown quantities. We know that it didn't fall right away. We know the word it wasn't over fast, which is exactly what the United States wanted, and I think Israel wanted, just a fast one. Didn't happen. So now you're starting to get what I call drug into deep water, and you see it in sporting events all the time where one team will be heavily favored over another team, and the next thing you know, you get on down the line into the game, and it's tight. It's really close, or maybe the other team's leading by a little bit. Now, I'm not suggesting in any way, shape, or form that the Iranian military has the capacity of the United States, because it doesn't. But this war is going to shift gears very soon, and it's either going to be over, which a lot of people in the markets believe today. You can't argue with price action. I mean, there's folks out there that believe that you're going to see early April be the end of the war. If that's the case, then they're taking a great position, right? The other way of thinking is, okay, what else can you really blow up? Incredible air superiority. You've got air superiority. You've got naval superiority. You've got all the toys and really everything that you need from a munitions standpoint to launch an offensive probably for the next 6 months if they want to. The problem is the defense, the interceptor missiles. That's the problem. And that's, from everything I gather, that's what has everybody very concerned. So what happens if it turns into a boots on the ground type of a situation? Well, then our VIX goes way up. And then the idea that this is going to be a fast war and a quick one, that goes by the wayside. And you're going to be in a situation where if you lose 5,000 casualties taking Karg Island, or if you lose 1,500 casualties trying a ground assault on the Strait of Hormuz, who's going to pull out? It's not how it'll work. They'll take initial casualties, and then the ground forces will get bigger, and the war will continue to escalate. If you follow Trump in any of his business dealings and anything he's ever done in his life, be it business-wise, politically, and now it looks like militarily, he doesn't have a tendency just to cut bait and walk away. Typically, he doubles down and doubles down and doubles down and doubles down. And I think that'll probably be the approach if ground troops are used and there isn't immediate initial success. So let's be optimistic that there's going to be success sometime soon. We want a quick resolution to all of this. And that will put our markets back to normal. Volatility will go back to normal. And a lot of the strategies that I've completely just pretty much mothballed, anything to do with rotation, sort of out in my book right now. You're looking for pullbacks. You're looking for things like this Fibonacci buy on gold late in the day. This is the type of thing you're looking for. So sort of a long way of saying that we're getting into the unknown portion of this. We knew going in the United States could blow up everything if they wanted to. They did that. Okay. We knew that the Iranians had greater capabilities than many people gave them credit for. We're seeing that. We're seeing that the supply of missiles is formidable. Once we get into the ground stuff, then it becomes an unknown because then the number of working parts increases exponentially. And we will see what happens. I'm not even going to venture a guess at this point. Usually I have a strong opinion about something. This, we're getting into the edge of my expertise in the unknown unknowns. I'm not even going to venture speculation. In any case, when you see the market trending higher like this, you got a couple of ways you can do this. You can just move your Fibonacci's up with the most recent extreme, or you can do what a lot of folks love to do anyways, which is just trade smaller time frames. You can go down to a 5-minute in this environment, probably be okay. It's a more aggressive move. I'd probably stick with a 30-minute chart if I'm playing intraday stuff, but still not a bad way to look at the markets. So 5 minutes can help you. Just be quick on the trigger. Don't let it get away. Let's take a look at the 10-year note. I don't want note futures. U.S. T-bond, 10 years. Okay, that's the pricing. What you want typically, you can look at the bond pricing. I like to look at the yields. Let's go to a daily. Okay. So this would be a positive development for the traders that believe that the war is going to be over. You're starting to see money come out of those bonds. And now you've got things back and going into gold, going back into stocks. So this could be any number of things this late in the month. I'm not sold that these trends are going to last, but this right here, this is a strong signal that there is a faction of people out there that believe that the war is winding down. Are they right? We're going to find out relatively soon. I think April's going to tell the tale. If this thing isn't done by the end of April, it's not going to be done anytime soon. And you could pretty much write that one down and book that. I think that's the case. That's really the equation here. It really is. So we're looking at that as well. The bond, it's so hard to trade bonds. Bond yields and things. I always look at bonds and specifically yields as investment vehicles, ways for you to get maybe a risk-free rate on your money as opposed to trying to get in here and scalp trade the prices of bonds and things. I believe that at least my approaches are more they're better suited to commodity trading and indices and futures trading than they are to try to scalp yields on bonds. That's more of an institutional type of a strategy, and we're just not there yet. So let's go ahead and take a look at WTI crude oil. We'll back up here to the 30-minute chart, and then I'll take your questions, and we'll go ahead and call it a day for the most part. You can see what we've got going here on WTI crude. I mean, there's no denying that 100 is the 10,000-pound elephant in the room. No question about it. It's not even debatable. Boom, right there to 100, bounced right off of 100. So now what's setting up for us here today? Well, the first thing I want to do is check my TPO charts, my time price offering, and there it is. I mean, that's like a Christmas present. Point of control. Point of control is right in the middle of our sell-off. What is it? It's right there at about 102.75. 102.75. So something like this would be an incredibly viable way to trade the rest of the session here for WTI crude. Fibonacci retracements 102.97, 102.33. That point of control right there at 73, somewhere in that zone. A couple of different things you could do. You could take a long right here, betting that we rotate back up to that point of control, but we have done a lot of business right there. I think you're going to get a decent opportunity maybe to scalp there to the short on 102.73. So it's not a bad trade at all, especially if you're looking for an intraday scalp. Be a limit order. You'd be looking to sell limit 102.70. Let's see, right there at 72.73. Let's go at 72. 102.72 to the short. Trade 4 contracts, $40 a tick. That's healthy position size. Remember, these are demo dollars. So something like this essentially is your trade. That's your point of control. You're right there at about 102.06, which it seems like. There's markets where there's no chance that you're going to rotate up 50-something cents, 60 cents, 68 cents to our entry. In this kind of market, it's possible. So if I was trading this type of a strategy during the trading day, right now, this minute, I back off and I go to a 1-minute chart and I'd say, okay, what does this look like? Okay, we've got our intraday 50%. We've got our intraday 62% right up there at 103. And then we've got our point of control, which is sort of our happy zone right there at right on 102.72. You can see with the size of these 1-minute bars that we could be in that trade very, very soon. Very, very soon. So this would be a situation. Intraday trading can get very tiring. I would be sitting here glued to my screen watching price action on a 1-minute chart because I want to know exactly when my trade goes active and what I'm looking for. As far as a take profit, I would be looking for something relatively, you could easily go for something like 25 ticks here. You really could, because there is that much volatility in there and not be out of line. I would be very conservative with it. I would be looking at something at maybe something like a 58, looking for a cool 500, 560 on that trade. That's a very tight scalp, and I think it has a pretty good chance of winning. And it's all predicated upon your 30-minute chart, which is just a great insight into your market profile, your TPO. If you're trading TPOs and market profiles on a WTI chart or even on any sort of futures, U.S. futures, you probably need to be looking at a 30-minute chart. That's for sure. That's for sure. Bab G's, well answered. Thank you, Bab. Eli, did they raise the draft age to 42? It doesn't matter. I'm 47 in June, so I missed it. My dad was drafted, though, into Vietnam. He served back, I don't remember the exact year. I think it was 69, 68 or 69. They drafted everybody back then. They were pulling people out of colleges. So the age of conscription, the U.S. Armed Services is large. The pay raises and the recruiting has really helped drive participation and sort of the volunteer army approach as opposed to conscription. But, and as with any conflict, those situations evolve all the time. So I don't know. Draft age to 42. Man, that's old. The draft age used to be like, 20, 22? Naomi, I agree. April will be the tell-all. Absolutely. All right, everybody. So right here, you can see we sort of don't pay attention for 1 second. And I mean, this is WTI crude. This is the world of energy right now. So what we're going to do here is we're going to go ahead and we're going to take those Fibonacci's off the chart because they really don't matter to me too much. And right there, we're sitting right around 75. So if I'm trading this, I know that my point of control is right on 102.73-ish, 1 point shade there. I'm looking to get in right at the point of control, but I want to be very careful that if price breaks above 75, that we don't get left in the dust. So do I want to put an initial stop loss down? In these market conditions, I would highly recommend it. The problem is if I do this live, the initial stop loss is just sort of a fail safe. You would need to put it up here somewhere just to give yourself a little bit of room to work. That's what I would say. I have no intention of taking that big of a loss on this trade. Something like that, though, you've got to have something down. Whereas if this market just blows in your face, then you just get out. Personally, I don't like that approach. I would, if you're looking to execute, it's really difficult to sit there because even if the market jams up to 103, it could still come down in a big hurry. I would much rather manage this just on a time-based sort of narrative. So you could put your stop loss way up here or something like that, so you have a little bit of insulation. But man, if something crazy does happen, you do need something to get you out of the market. It's just that's why a lot of people wouldn't even consider trading this type of market condition, just because it's too volatile. So with 4 lots on, you can see how big the dollar sizes get. They get extremely large. I would definitely be looking at probably a micro contract as a much better way, much safer way to trade this, where you're only playing for maybe $1 a point instead of $40 a point, right? Or maybe just one contract. That could work too. In any case, you can see sort of what's happening here in WTI. You're getting good rotation right now, right around 102. We could end up waiting all day on that trade to come across the board, and it may or may not happen, but I do like it, that point of control. Interesting stuff. And you want it right now. You want it right now here in the next 17 minutes. If you go into the end of the day, it's not as good. You want it right now if you can get it. All right, everybody, sort of looking at that gold market. Did we get any love on the gold trade at all? I don't believe we did. 30-minute chart. Let's go right here down to our 30. Okay, so the way that you would adjust this, just Fibonacci's on the fly. Fibonacci's 101, something like that. The most important thing is figuring out where you're going to base your wave at. So right there, this low, 735, you could theoretically work off of that. I don't really see the point. It's only a few ticks, and given that the size of that spread being 100 pips, probably not the best idea. You want a big, nice range to work with, and that's the bulk of the U.S. range. So uptrend definitely there. Maybe go in somewhere right in here. Look for that initial bump, maybe somewhere right up in here, just a few dollars. And these ranges are so staggering, and they're so large that you can shoot for a little more money in this environment and get away with it. The big thing you don't want to do is just get sucked in with a big loss. That's the absolute key. That's the key to trading this, that's for sure. All right, everybody, I'm going to go ahead and sign off. I'll tell him, Eli. I appreciate that. He's pretty, the stories. I never really missed a chance to listen to any of the stories from that era, the Vietnam era. And then also a lot of my friends served in not the first Gulf War, but the second Gulf War back in 2005 and 6 or 4 after 9/11. A lot of folks served there. I had friends in the Air Force, friends that were on the ground. And you never miss a chance to listen to the stories, because you learn a lot. Someone like me who's never served, definitely never miss a chance. And then the old timers that served in World War II really never miss a chance to listen to them talk about their experience. It's important. I think it's always important to listen to really everything you can. The truth is always somewhere in the middle, guys. And I think it was a really great statement. Nobody wins in war. The only way to win war is to not play. Yeah, only way to win the game is to not play. Essentially, that's what we're looking at. But be that as it may, that's the situation that we are now in. We will see exactly how this thing unfolds. I believe there's a lot more questions than answers at this point. However, we are seeing good bullish price action today and a lot of optimism in the markets. Gold, up a little bit. Crude oil sort of down a little bit off of today's highs. You've got the Dow up about 1,000 points. So this is an interesting day. No question about it. Last day of March did not disappoint. All right, everybody, I'm going to go ahead and sign off. We're very much in a holding pattern for right this minute. Let's see. We've got. I'll end up getting in there and finishing up the schedule, but we'll be live the next 2 days at the same time. No matter which platform you're watching on. We do have NFP live on Friday, though. Be sure to cover that. I'll have that live in real time for you, and we'll get in there and see if we can't find a trade or two amid the volatility. We should be able to do that. And if you have anything else that you want to ask me, head on over to How to Trade. Get your free account. Click on it. Send me a private message, and I'll be sure to get back to you in short order. All right, everybody. You're welcome, Naomi. You're welcome, Ralph. You guys have a fantastic trading session. We had a trading idea out earlier today, so we're going to sort of take it easy. Keep an eye on the news. anything can happen at any given time. Keep an eye on the news. That's for sure. Absolutely. Lots of liquidity. Absolutely, Marvel. I appreciate you guys dropping by, and you're welcome, Eli. Absolutely, Bobby Bob. You guys have a fantastic trading session. Remember, watch that risk. These markets are crazy right now. Watch that risk. Watch that risk. That's all I got to say. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.